you all are doing well. So today we're going to talk about the next topic and my yesterday's Friday's trade using the swing model that I explained in earlier videos. Okay, so I'm gonna go step by step how I took the trade and why it makes sense. Right, I will explain in the end the trade that I took using the swing model. Right now, so today we're going to talk about the very important topic, which is a liquidity. So what is a liquidity, how we're going to use it and to our advantage, and on the chart how to identify them in the market and use it as a tool. Okay, so what is a liquidity? So in general term, liquidity is a money, right? So people says market is more liquid, right? So what does it mean? So it has more money into it. So liquidity is nothing but money. Now, so how to spot or identify the liquidity in the market? And so every single high and low in the market has a liquidity. So every higher high, lower low, or lower high, lower high has a liquidity above or below it. Okay, so that's the first point. So every single low here has a liquidity. Okay, this and inversely in the bullish market, this is a bearish market on the Canadian, right? Now that's the one thing. Every double top, double bottom, triple bottom has a liquidity above or below it, right? Liquidity attracts the price but does not decide the direction. So basically, whenever you enter the trade and you identify the liquidity spots, so they are targets. They do not decide your direction or the bias of the trend. Okay, so keep that in mind. So liquidity is only targets. Okay, now how to identify this thing in the market, right? Now every equal low and high, like as I said, like every single high and low has liquidity, but equal lows and highs also has liquidity above it, right? So how do I spot those in the market? So there is a kind of a misconception, I don't know, in the industry, that how to spot this equal lows and highs. But for me, in order to find equal lows and high, this low does not need to be broken by the next. So this line has ton of liquidity above it, right? Yes, so this is how this is a equal highs for me. Okay, so if something like this happened here, this is not equal low, well, at least for this two, because the liquidity is already been taken, right? So for me, I will not consider that as a liquid equal low. Yes, there are the liquidity above that newly formed low, but that is already been taken, right? So for example, like this, okay, this liquidity is taken from this low. In this perspective, this is not equal low, just two. Okay, let me find a better example, like, okay, maybe some other on the pound. Okay, so yes, it's very nice example. So these are equal lows until this has been taken by this. So now these are not equal low. Yes, there are liquidity above this, but for me this liquidity has already been taken. Okay, same with this case. So this is, you see the wick below this liquidity of this has already been taken here. So how do we identify those in the market? It's just simple. Every single high and low has a liquidity. For example, this in this example, euro US dollar. See again, this liquidity has been taken by the way, and order block is more has more weightage. If you see something like this, liquidity has been taken and then a violent reaction in the opposite direction. So order block stands more weightage in this case, right? Same example here as well. So liquidity is taken and then the bullish reaction, right? So and so on. So this is kind of a very broader topic, but for our strategy point of view or perspective, just keep this four thing into the mind. Okay, every single high and low has liquidity above it: double bottom, triple top, double top. Okay, and just do not forget this: they are the target. They does not decide the direction of the trend. Liquidities are targets. Okay, and you can spot it equal lows and highs based on the explanation I gave it here, right? So this is it about the liquidity.